Meta just dropped an earnings report that absolutely blew everyone away. And now the question isn't really if the stock will keep going, but just how high it can actually go. So is a $1,000 stock price really on the table? Well, it's starting to look a whole lot more likely. Let's dig in.
Okay, first things first. Meta's latest earnings, they weren't just a beat, they were a massive statement. You know, Wall Street was pretty skeptical of Mark Zuckerberg's huge spending for a while there, but now they've given him a resounding green light to go all in on AI.
So, why the sudden change of heart? Well, just look at this number. 24% year-over-year revenue growth is just staggering for a company of this size. And what's really wild is that they're not even slowing down. Nope, the company is actually guiding for an acceleration to 30% growth next quarter. This isn't just growth. This is a machine kicking into a whole new gear.
And this quote from Zuck, this really gets to the core of the strategy, right? It's a super clear mission statement. Use the phenomenal profits from the core ad business to fund a future that Meta completely owns and controls, a future built on AI. It's incredibly ambitious, and it looks like the market is finally getting on board.
Okay, so where is all this cash coming from to fund this massive ambition? It all starts with the first piece of the puzzle, the first pillar of this bull case, the sheer raw power of Meta's advertising engine. This thing is the financial foundation for absolutely everything else.
Now take a look at this chart of their total revenue. It's not just a nice, steady upward line. Look at that jump, that spike in the last quarter. That's not just momentum, folks. That's an explosion of financial power. It's like the engine just found another gear.
And the fuel for that engine? It's people. All of us, right? Even at this mind-boggling scale, we're talking over 3.5 billion people every single day. The user base is still growing. The fact that it continues to expand is just another signal that this engine has plenty of fuel.
So here's how you connect the dots. It's actually a really simple but incredibly powerful flywheel. You've got more users, right? That means more eyeballs, which leads to more ad impressions being delivered all over the world. You can see that steady climb right here. And more impressions, well, that directly fuels that crazy revenue growth we just saw.
That advertising flywheel is basically a cash printing machine. So where is all that cash going? Well, it's funding one of the biggest, most audacious bets in tech right now. The race to build artificial general intelligence. And believe me, this is where the story gets really, really interesting.
Yeah, just let that sink in for a second. Up to $135 billion in planned spending on AI. That is a jaw-dropping amount of money. And honestly, in the past, a number like this is exactly what freaked investors out. But things are different now. So why is Wall Street suddenly cheering this massive spending? This slide really breaks it down perfectly. See, Meta is investing in itself, its organic growth. They're building their own future. Now, contrast that with a competitor like Microsoft. A huge chunk of their cloud growth depends on just one big customer, OpenAI, and that creates what's called concentration risk. Think about it. If something goes sideways without one partner, Microsoft's growth could really take a hit. Meta's bet? It's on Meta. And that is a much, much safer long-term game. And this, right here, this is the end game for Zuckerberg. He wants to own the whole thing, from the custom chips all the way up to the AI models themselves. By controlling that entire stack, he's basically building a fortress. It insulates Meta from what other platforms are doing, and it means they can innovate without having to ask anyone for permission.
Okay, so this brings us to what I think is the real heart of the valuation case, and it's something the market, for whatever reason, still seems to be missing. We need to talk about the insane amount of pure, hard cash this business churns out.
Look, historically, it's been pretty simple. Meta's stock price has almost perfectly tracked its free cash flow per share. That's the key. And why free cash flow? Because it's real. It's the actual cash left over after you pay for everything. It's the purest signal of a company's financial health. And for Meta, the stock price, well, it follows the cash.
And this isn't just theory. Just look at the hard numbers on this slide. We're talking over $14 billion in free cash flow in the last quarter alone. So the argument here is really simple. Yeah, the stock has had a great run, but the price still hasn't caught up to this fundamental cash-generating power. That key indicator we talked about, it is flashing bright green.
All right, so let's put all the pieces together. What does this actually mean for the stock going forward? Let's look at the full picture.
So, to wrap it all up, you basically have this powerful three-part story. First, you've got the core ad business. It's not just a monster, it's an accelerating monster.
Second, you've got these huge but really smart strategic investments to own the future of AI without depending on anyone else. And third, and maybe most importantly, you've got a valuation that, if you measure it by its most reliable historical metric, free cash flow, still looks undervalued.
And that really leaves us with this one big question. When you have a business that is this strong, firing on all cylinders, funding a future that could change everything, and it's still fundamentally undervalued, what is its true potential? You know, that $1,000 price target? It might just be closer than a lot of people think.